Good afternoon, good morning, everyone. Ma'am, session is live now.
Thank you, Asif. Namaste. A very warm welcome to the webinar on Revolutionizing Digital Financial Services, the second of a five-part series on digital technology innovations, case studies from India and the Asia-Pacific region. I am Bindu Srivastav, and I'm responsible for Marcom and Partner Relations at TSDSI. I, along with my colleagues, Mr. Asif Iqbal, Ms. Shivali Sinha, Ms. Sonia Sachdev Sharma, and our collaborator from ITU, Mr. Calvin Chan, are your hosts for this webinar. Before we begin, here are a few hygiene announcements. All attendees will be muted throughout the workshop. If you have any questions for the speakers, please type them in the questions tab. This webinar is being recorded and will be posted to the TSDSI website within the next few days. Speakers are requested to kindly deliver your presentations within the allotted time durations. A warning chime may sound 2 minutes before your scheduled time is up. Here is a brief introduction to the webinar series. This series is organized jointly by Telecommunications Standards Development Society India, TSDSI, and the International Telecommunications Union, ITU, with support from Department of Telecommunications and select ministries of Government of India and other partners from the Asia-Pacific region. It will showcase digital technology implementations and success stories from the public as well as private sector, with the objective of strengthening collaboration within the region on digital communication technologies and standards. This second series webinar is split into two halves. The first half of the webinar will dive into the current state of digital financial services with expert talks on the India context, the global ecosystem, followed by specific linkages to global and regional standardization. The second half will highlight actual innovations and use cases. It will include a briefing on innovations in India, e-payment systems, new initiatives related to digital financial services security, and opportunities of innovative financial inclusion technologies at the regional level to bring the unbanked into the formal financial segment. A few materials on ITU and TSDSI work in this space are available as handouts tab in the dashboard of the tool. Participants may like to download these for their reference. I will now introduce you to the speakers, distinguished speakers of this webinar. Today we have Ms. Pamela Kumar, Director General, Telecommunication Standards Development Society, India. Mr. Dilip Aspe, Managing Director and CEO, National Payments Corporation of India. Mr. C.M. Maladi, Head of Financial Services and Digital Payment Innovation, Tata Consultancy Services. Ms. Sophie Maddens, Head, Regulatory and Market Environment Division, Telecommunication Development Bureau from ITU. Mr. Narendra Yadav, Vice President at Paytm. Mr. Vijay Mori, Program Coordinator, Telecommunication Standardization Bureau, ITU. And Ms. Siska Margareta, Chief Marketing Officer, Experian Asia Pacific. Thank you, ma'ams and sirs, for joining this webinar. I would now like to invite Ms. Pamela Kumar, Director General of TSDSI, to set the context for the webinar today. Ms. Pamela Kumar is the Director General of Telecommunication Standards Development Society and also the founding chair and current president of Cloud Computing Innovation Council of India and the Bharati Chair visiting professor at UIET Chandigarh, Punjab University. Ms. Kumar, the floor is yours.
Thanks, Bindu, and welcome everybody to this very insightful session. As we think about adoption of technology, especially the information technology, the finance industry has been the key driver for all the innovations in information technology. As we look back at it, I mean, companies like IBM and all, I mean, it was all these technologies were essentially developed for the financial sector and then gradually proliferated into other spaces. And if we look at what's happening today with the convergence that's happening between communication and information technology, and as we're getting into this 5G era, this is a good we have a lot of use cases specific to developing countries happening in India. So, and technology really has the potential of revolutionizing the finance sector. And that's what we hope to come out of today's discussions. We'll get a glimpse of the revolutions that have already been caused by technology in the finance sector, and also some of the new trends that are there on how we'll take things to the next level, the reach to everybody, and access to different financial use cases. So in order to share with you the impact of technology, there is a small video that we would like to play first. So Shefali, can you please play the video first? Yeah, so this is a very good example of what technology can enable, and what we will see today are the architects of this revolution that has happened in India in terms of digitalization of the financial sector and its reach to everybody all around in the country, and how people are embracing it and adopting it and using it for big and small transactions. So the success story of India uh, with mobile financial transactions is there to be seen, and what has enabled it is the Aadhaar, which was our unique identification system, and combined with the national payment corporations putting in place what they call the BHIM app, and the UPI. So we will which is the United Payments Interface. So we will get to the grassroots of what has really enabled this, and made it possible for everybody to use digital financial transactions. Now there still remain several challenges, right? The one challenge is the fact that there are so many languages in India, and not everybody can transact in English. In order to look into this, we have within TSDSI a study going on in one of our study groups on the requirements to support Indian languages in mobile transactions. There is a report which has been published, which is in the final stages of publication, which recommends minimum requirements at the device and network level and a list of mandatory features for mobile-based financial applications. It also recommends support for multiple inputs such as text, speech, touch, and fully utilizes the work done under the technology development for in Indian languages program for Indian language, program on Indian language text to speech synthesis systems. This the complexity that this has dealt with, we know that there are on 22 official languages in India, and there are few hundred dialects. So this is the next revolution that we expect to happen through this work that's going on. So with that, I hand it back to Bindu to take us through the proceeds of today's program.
Thank you very much, Pamela, for setting the context. The fact that financial sector has been a key and a major consumer of technology, ICT technologies, is well known, and the opportunities and the challenge of involving folks who speak multiple languages and have different levels of literacy or accessibility is a very important aspect for bringing everybody into the financial fold. These are some topics that will be covered as we go into the webinar. I now invite Mr. Dilip Aspe, the MD and CEO of National Payments Corporation of India, to deliver his talk. Mr. Aspe has played a pivotal role in designing, building, operationalization, and management of large-scale innovative payment processing platforms like the Unified Payments Interface, UPI, Bharat Interface for Money, BHIM, Immediate Payment Service, IMPS, and India's own homegrown card network, RuPay. Mr. Aspe, over to you.
Thank you. I hope you can hear me clearly.
Yes,
okay.
Mr. Aspe.
Yes, thank you. Let me just, then thank you for the opportunity inviting me to speak in this seminar. And sorry, I've got a little bit cold, so kindly bear with me on this. Let me just start the NPCI journey. NPCI was the organization set up by RBI and the Indian Banking Association together, right? And majority, it started with the bank's ownership, and now it has a non-bank ownerships as well. The intent of starting NPCI was, there were two intents. One was, the hive of the operational activity which is done by the Reserve Bank of India. That was the initial thought process. And also this entity can take up the projects which are appropriate for to accelerate the retail payments, or as Ms. Pamela Kumar said, the digitalization journey, right? To begin the digitalization journey in the country. Today, it is about 11 years old organization. It is set up as a public good organization. What it means is it's a not-for-profit. It can make profit, but it has to reinvest the profits back into its innovations. It is about 1,000 employees now. Last 11 years, we have been involved in various payment systems. Initial few years were running the check truncation system, running the interoperable ATM NFS, National Financial Network. However, we started in 2010-11 itself, we started one of its first the real-time payment system, IMPS, right? So money can be sent from one payment system to the other payment, to one account to the other account in a matter of 3 seconds, 5 seconds. Obviously, nobody felt that it was required at that particular moment. So initial 2 years, 3 years, we didn't see much of the transactions. NPCI employees used to send money to each other. That's what the use of the IMPS was, to be honest. But it started picking up in 2013, and it processed over 3 lakh crore transactions on a monthly basis today. We also, when NPCI was starting, at the same time the UIDI was also starting, and fortunately, the Mr. Nandan Nilekani, Mr. R.S. Sharma, and we kind of NPCI decided to partner them in a big way with UIDI, and that kind of helped to build up two big platforms which NPCI runs today. One is the Aadhaar payments bridge, which government uses for all the subsidy payments. The direct benefit transfer is what we call it, and the second is the Aadhaar enabled payment system, which is used by all the rural citizens to do the banking services at the banking correspondent. We also had started to envisage that country of a population like this cannot rely on the international card schemes only. So we started thinking of RuPay, and the RuPay started in 2012. Obviously, it started as a ATM card to initially, then moved on to the digital payment instrument, and 2016 we started it as a full-fledged debit card, and last 2 years we are also launched the credit card variant. We and while we were in the journey in the 2014 2015, all of us started feeling that as it was discussed, the smartphones and the data connectivity was on the rise, and we started feeling that we must leverage this smartphone growth in the India and the data availability across the country. And we thought, it's the right time to launch a smartphone-based payment system, and then there comes UPI. The UPI was again envisaged and conceived by the entire ecosystem along with NPCI, and NPCI today runs UPI. We also run what you call the National Electronic Toll Collection. We call it as a FASTag. Today the 95% of the toll collected on the national highways is now on the electronic platform. Only 5% is cash. So you can imagine, 3 years back, 4 years, 2.5 years back, the total daily average collection was about 50-60 crore. Now the daily average collection is crossing 100 crore on the electronic system. So kind of leakages and kind of efficiencies which we are trying to bring in back into the payment system it is fairly evident. We also have started two more initiatives. One is the NPCI International. So today the NPCI's platform process huge number of transactions in India. So we thought it's the right time to leverage them globally. And we have started a subsidiary called NPCI International, and its core objective is to take the NPCI platforms to operate on a global. So right now we are operating as a public good in India. So our objective is how do we take it to the public good of the world. Today we also have the Bharat bill payment system, which is obviously at a very nascent stage. But the interoperable bill payment is a very critical issue in the country, and we are trying to operate a fully interoperable platform, Bharat bill payment system, to facilitate the interoperable bill payments on all electronic channels and all electronic payment modes. So this is about the platform. All of you are aware. We have about 6 billion transactions monthly processed by NPCI and its platforms today we have about 1,000 employees. Most of all the platforms are owned and operated by us. Most of the platforms uses the open source technology. We have about 1,000 people, employee strength in NPCI, and we believe we are a deep tech organization. And we kind of build the ecosystem in such a way that we facilitate. We are a clearing house. We are a service provider to the banking and the financial services ecosystem. most of our products would have seen that collaborates the forces the collaboration between the banks and the fintech. So that way we kind of believe in creating a vibrant fintech ecosystem in the country to provide the financial inclusion, to provide the better access to the financial services. Obviously, there are while this is a good part, but there are some concerns as well, right? We're grappling with few issues, as Madam Pamela Kumar said. The user awareness. We personally believe that we can go to the 10x volume than what we are today, right? So if we are processing 6 billion transactions on a monthly basis, I believe the potential of the country is to process 50 to 60 billion transactions on a monthly basis. But what are the challenges? The challenges are mainly the user awareness and literacy. And I think, as we discussed before, the multilingual, the variety of languages what we have is very important to be catered into, and the users should be made available the literature and the apps in a regional languages. The second issue what we believe is the availability of the service in all the location, right? And which is where the telecom service providers and the DOT can play a major role. That availability of the data connection, penetration of more smartphones would be very crucial. We are in the process of launching now the feature phone based payments, IVR, and missed call based payments. But obviously the smartphone based experience is very good and very encouraging. So we believe that the smartphone is going to be the smartphone and the data availability is going to be the key to get the penetration to the level what we are looking at. We have about 300 million Indians using the digital payments right now, and we believe that easily this number can be multiplied by 2x or 2.5x in next 3 to 5 years time. And at NPCI, we believe that we want to process the billion a day. In India, we are somewhere around 200 million transactions processed by NPCI on a daily basis, and I think as a country we should aspire for a billion a day transactions in next 2 to 3 years time. Obviously, the credit of the digital payments and success story goes back to the regulator, to the government, to have the very fintech and the innovation-led policy-based approach by both RBI and the government. And both have been very clear that the digital payments is very crucial for the country, and they must promote the digital payments to become a very at least a less cash society, if not a cashless society in that sense. And today the banks in the country have a very large contribution to the digital payment ecosystem. Today, majority, today NPCI platforms, we have about 1,000 plus banks operating on various payment systems which are live in the country. And before NPCI, about 30-40 banks were active in the payment systems, but now we see that over 1,200 banks are issuing RuPay cards, about 250 plus banks are participating in UPI, about 400 banks participating in IMPS, 1,200 banks receiving the DBT. The infrastructure which NPCI has built up, was very helpful for the country in the COVID times, right? The COVID times, the citizens the government could send money directly to the bank account of the customers, and having the money at the most appropriate time, because the jobs were not there, and many of the migrant workers were gone back to their homes because of the COVID situation. And using the business correspondent Aadhaar based payment system, the people could withdraw the money at the right time and could use the money to fulfill their needs in terms of food and basic necessities. In the urban and metropolitan areas also, the QR code based payments offered, the contactless payments using the debit cards, UPI. It was really helpful for the citizens to make the remote payments very efficiently using UPI and again debit cards, credit cards. So in that way, we believe that while we have gained a lot of traction, while we have gained a lot of encouraging response from the citizens on the digital payments, but I believe that we still have a 10x growth possible, and we must put in our efforts, the entire ecosystem, the government, the regulators, the banks, and the fintech ecosystem, to scale it up further to make a billion a day transaction for the country what we deserve. So that's all from my side. Just giving a brief on NPCI and digital payments, and I'll be happy to answer the questions in the Q&A session. Thank you.
Thank you, Mr. Aspe. Innovation-led growth and innovation-led initiatives, especially the ones that you've mentioned, including the e-toll, are something that we from India are witnessing every day. I now invite Mr. CM Maladi to speak, give a global context for digital financial transactions. Mr. Maladi is a senior leader at TCS India, driving Digital India solutions and platforms. He has 26 plus years of experience in large transformation and growth-led programs in banking and financial services. Currently, the strategic business unit head for banking and financial services platforms, both digital payments and other enterprise business platforms in the area of digital lending, omni-channels and marketplace apps, including KYC Hub. Over to you, Mr. Maladi.
Thank you so much. Hope I'm audible. Yeah, can you just help me to share my screen?
Yes, Asif, can you please help Mr. Maladi?
You are able to see my screen? Were you able to see my screen?
Yes.
Yes, we can.
Okay. Thank you so much. Very good morning to all of you. Good morning, Dilip. Good morning, Pamela. So I think I'll take 10-15 minutes time to bring in the perspective of the global context of the digital financial transactions. As you know, TCS is a global company where we have been doing multiple payment initiatives across the globe. So I'll just take you through some of the trends which globally happens, and then the India and Asia Pacific, and then specific to India. So what lessons we can learn from there, and then how do we take it to the global perspective, in the sense of various countries in the APAC region comes with the different cultures, but more or less like India, different languages, different dialects, different cultures makes a lot of difference. But at the learning from India is definitely a takeaway for the global market. That's what we strongly believe. And we have been implementing many of the systems and applications for various stakeholders in the payment ecosystem. So I'll just get into the global trends briefly to give you a perspective. What we observe today, and also based on the research that we do, is that the contactless payments has become a key enabler in the pandemic situation. Now people are realizing that the people have to move towards an NFC-based payments and RFID-based payments, the EMV technologies, voice-based payments, the wearables. A lot of those payments enablement where you don't need to touch any physical surface or the cash is becoming prominent. And the second area is the investment in unified technology. There are multiple railroads that each country has innovated in. In fact, if you take India as we talk, so starting from RTGS, NEFT to all the railroads that NPCI provides. So like IMPS, UPI, Bharat Bill Pay, all of that. So if you look at, there are around 12 railroads across for making a payment, but essentially these are all end of the day do one thing, that is account to account transfer. So the account, the beneficiary and the sender may differ, but essentially they do account to account transfer. The evolution took place over a period of 10-11 years right now in the real-time payments in India because of the contribution from NPCI. But essentially, it is a time to look at the unification and also look at what benefits we will get from the unification of the creating an omni channels, and the banks have got different types of channels as well. So I'll speak a little more about it in subsequent slides. And then the embedded technology of payments are becoming part of the usage that we do. As part of the wearables, it's part of, so to enable the security, to enable the PKI infrastructure, and essentially it becomes important that the payment transactions are part of the embedded as part of the payment transaction itself. And another trend which we see is that the advanced technologies like cloud, the AML, mass personalization, like where you can do a personalized recommendations on the fly and enabling analytics as in APIs and things like that, we see as a trend which is coming up globally in terms of delivering that ease of use and simplicity to the users. And usage-driven payments, essentially payment has become invisible behind every transaction, every purchase, or every consumption of the service. And essentially, payments are more or less where we used to visibly transfer cash has become completely invisible. And in that, it becomes how seamless it is going to define the success factor of the growth of the transactions. And these are some of the trends we see globally. And then we move on to the trends that we see in India and Asia Pacific. If you look at it, I think India is one country which started going from the batch time payments, like where we used to have most of the payments up to a window. RTGS now became 24/7. Before it was up to 5 o'clock in the evening, and NEFT was up to 7 o'clock in the evening. But now they have become 24/7, and they are also trying to become whether they can become a real-time payments, right? So the trend is towards a real-time payments, and the growth is pretty high because of the benefit that it generates for the real-time payments to the end beneficiaries. It is also looking at the settlement, can it be real time? And I think we are trying to touch the new barriers and then break them, and then look at whether we can do a settlement real time, and whether we can, and the physical access of cards is slowly reducing. And I say reducing not in terms of the number of transactions, but the percentage of contribution is reducing, and the physical e-wallets are growing. And China, India, South Korea have been leading the entire journey, and where India is in some areas have definitely surpassed China. But essentially looking at the digital payments without having any physical cards are becoming virtual cards. That way it is enabling the customers to be safer and also fast, real, and affordable. Very important point is to drive the recommendations back to the user, saying that your LCD bill is due so and so date, your rent is to be paid now, and things like that, which alerts the users to make sure that his behavior of payment patterns are analyzed and recommended back to him, and only private to him. Is very important trend that we see nowadays in the most of the online channels, online marketplaces, and the fintech players are trying to drive. And essentially the government to citizen payments, especially Dilip spoke about the TSDSI, the doorstep banking, and also spoke about financial inclusion in India and the direct benefit transfers. And the government published report says that 1,700 billion rupees have been saved by the government because of the enablement of this direct to account in the consumer's account directly from the government. So where there is no middleman, it's a huge success, it's a huge achievement for this for the government. And the e-wallets are growing very well in China, Thailand, South Korea, and I see some of them in Indonesia and Philippines as well. So from here, I will move on to some of the observations. I have been associated with the payments at least for the last 11-12 years, 2009 onwards in the India payments ecosystem. And what according to me, some of the key drivers that helped the digital payments outburst. Very important thing is, if you want to make a payment, you need to have an account, some account, whether it is e-wallet account or is a bank account. So the PMJDY program, or a financial inclusion program, enabled a large people to have accounts. That's a primary to have anybody to do a digital transaction. Okay, then the affordable data with the advent of the smartphones, the data networks. I remember the days where I used to travel to villages to do financial inclusion, to look for a data network, and we used to look at some of the buildings and go on top of it, find signal, and then try to reconcile the transaction. From there to today, if you look at it, the telecom communication, the telecom community has helped a lot in terms of the enabling the data network, and the data network is affordable, reachable, sustainable, available always, is very important factor that driven the financial transaction outburst in the country, and smartphone penetration obviously. So this is one key pillar I believe that helped the digital payments outburst in India. And similarly in other countries, I see these are the common things which are there, financial inclusion taking place. We are doing projects in Bangladesh as well nowadays. So if you look at it, I think people, the IPAC countries are trying to look at what India has done and what lessons that we can learn from here, and then take it and adopt into the international market. And then very important aspect which has contributed to the digital payments is the simplified journeys. See, if you look at the various financial institutions in India, everybody had internet banking, mobile banking, telebanking, SMS banking, a lot of these things. But essentially what made the difference for some of the payment apps today, 90% of the UPI transactions today, the biggest positive point is the simplest way and straight up point, and there are very simplified journeys that they are able to innovate users to stick it to the application, right? The app, that's a stickiness creation. has contributed to the large number of usage and awareness among the users. And obviously the local language and dialect plays a very important role. I think that's the next journey India would take it. And another very important point is the JAM Trinity, Jan Dhan Aadhaar Mobile Trinity, the framework that is created in India where you are connected with the mobile account number and the mobile number with the Aadhaar. See, these three things have contributed to a lot of digital payments according to us. And this is the learning where your ability to onboard a customer is very, very affordable, very, very cost effective. In the sense, if you want to open an account, you want to do a KYC for him. Aadhaar enables to do a KYC with a very lower cost, and you don't need a penny paperwork to happen. And then your Aadhaar gives you an authentication mechanism where you can authenticate the user or the UPI PIN mechanism. You have a smartphone. I think the key success factor for the digital outburst is this JAM Trinity network, where we could include not only the urban population but also the rural population on the ground. And the advent of externalizing the payment ecosystem outside the financial institution. Like many of them we used to see 5-6 years back, most of the payments used to be done by the banks only. Now you see non-banks coming out of it, and then they are contributing to a lot of these payments. The ability of this open banking, the open framework where anybody can contribute to capturing of the transaction, but settlement is done by the settlement agency. Banks and financial institutions have become a processing network. This structure has enabled the outburst and innovation in the payments. The other area is the very important area is the interoperability. I think with the advent of NPCI, with the RBI and the IDRBT, which contributes to NEFT, all of that, very important point is seamlessly a person is able to send from one person to another account, whether it is a bank account or any other account, is able to do interoperability. And many of the countries were struggling, especially in the African region, because of lack of this interoperability, though they have taken the very good initial advantage of mobile penetration. But essentially, the framework to work on interoperability across the financial institutions and the non-banking financial institutions is a key success factor for the outburst of the payments, is my view. So essentially, these 5 factors have helped the outburst, and payments is an ecosystem play. It's not about one individual company or one individual entity's activity. It's basically the 4 or 5 entities come together, they contribute to the ecosystem. And very important point is the pillar that India has, the Digital India pillars, which is enabling the transactions to cashless and be able to do presenceless, contactless and consent-based transaction. Very important is to ensure the privacy, authentication, authorization, security aspects of the user, consumer benefit realization, consumer protection. And these are the aspects which actually help the entire digital payment ecosystem outburst. It's an ecosystem play, and a lot of the players, many players are from the fintechs to banks to organizations like NPCI to the issuers, card issuers, and many of these networks. So what we have done, looking at this ecosystem for the last 11-12 years is TCS has come out with a payment processing as a box where we connect the entire 4 players. If you look at the players, are 4 players. One is the people who acquire the transactions, the people who process the transaction, the organizations which settle the transaction, and the organizations which issue the account. So these are the 4 key players of the payment ecosystem, and we connected all these 4 ecosystem players by creating a single unified payment platform. We are done a little innovation in terms of where we can actually consolidate the payment methods. Like if instead of having a different payment method for each of the railroad that the settlement agency provides, but rather looking at an omni-channel framework where the user will have one single interface to do whether it is a remittance transaction or a bill payment transaction or a purchase transaction or any type of transaction that he does. And when come out with the common payment hub, where your transactions are processed with a single point of reconciliation and single point of dispute resolution and single point of processing ability, where I can understand the payment pattern and analytics of the data and then recommend back to the particular user his own data to say that this is your payment pattern and this is the where you have spent your money and this is where you have spent a lot of this money on convenience fee, and guide the user to give the better benefit out of it, and creating the adopters to the settlement network, whether it is with NPCI or whether with RBI, with Master, Visa, all of them. The entire payment ecosystem, we connected into a payment processing platform as a platform and a consumption as a service. So I will move on to these various areas we as TCS have been working. Is that we work with we are a technology service provider.
Mr. Maladi, request you to kindly wrap up quickly. we are exceeding time.
Yeah, I'm
Thank
doing.
you.
So we provide to all these payment service providers, and then we have done a lot of work in the financial inclusion space, where contributed to many of the organizations to come on under the board. And I think I'll come to the last slide where we are saying about the recommendations. What we believe is the unification of the channels and the payments becoming truly invisible, and form factor independence, where we are able to drive whether you access from mobile or a computer or from any other desktop, you are able to do the one single technology platform. Looking at payments, blockchain kind of environment where you can actually get in all the agencies into a single framework where they can share, and consent based sharing mechanism, and able to see the transactions on both sides. And the very important point in terms of the consumer protection, financial education, enhancing the digital payment literacy, I think, which Dilip spoke about. I think this is where I believe some of the areas that we need to focus to drive the further adoption, which Dilip is talking about, 10x or 20x. Thank you so much for this opportunity.
Thank you, Mr. Maladi, for that wonderful overview. The fact that mobile phones and which enable the creation of e-wallets and affordable connectivity for data flow will enable, gives an opportunity for bringing the unbanked into the financial fold. That's proven. We now invite Ms. Sophie Maddens to share her views on digital financial inclusion. Ms. Maddens is the head of the Regulatory and Market Environment Division at the ITU BDT. A lawyer by training, Sophie Maddens has worked as regulatory and policy expert in the telecommunications ICT sector in international and multicultural environments, including in the Asia and Middle East regions, as well as in Americas, Europe, and Africa. Ms. Maddens, the floor is yours.
Thank you very much, and good morning to all. It's been fascinating listening to the various other presentations, and Mr. Maladi, definitely you will hear the issues that you brought up repeated in my presentation, the ecosystem. But I want to focus on really how to leverage ICTs for financial services and how this contributes to achieving digital financial inclusion, because digital financial services are delivering a new frontier in economic growth and financial inclusion. Just think about it. They're strengthening the capacity of domestic financial institutions and encouraging and expanding access to banking, insurance, and financial services for more of the population than ever before. They're increasing access of small-scale industrial and other enterprises to financial services, including affordable credit. They enable business opportunities for small and medium enterprises and increase employment, funding access to electricity and water, working capital for equipment, and insuring against downturns and storm damage can improve sustainable agriculture, food security and nutrition, and reduce hunger. Borrowing for and ensuring health can help mitigate risks to families' financial stability. A better future can be sought by financing investment in education. DFS have been launched in multiple countries, with some reaching significant scale. As a result, millions of formerly excluded and underserved customers have successfully moved from exclusively cash-based transactions to formal financial services. Sorry, if you can still, yes, the title slide is good. Since we've entered the COVID crisis, we've seen many examples and calls for economic transformation and adoption of digital business models, including increased use of digital financial services. That's yet another example of access to digital technology and infrastructure. Access to technology and tools such as mobile phones for consumers and digitalization of business processes for SMEs is the foundation of digital development and recovery. So we've seen a massive shift towards digital markets and digital finance within this pandemic and the lockdown that followed it. The digitalization of finance for both individuals and firms can reduce the costs and open up new market and livelihood opportunities, helping countries to rebuild better after COVID-19. But it's also posed challenges, and we heard issues of trust interoperability. So this has led us to a greater digitalization of financial services, but we must find the right balance between enabling financial innovation and addressing the risks and challenges, such as the need to enhance financial and digital literacy, the need to foster affordable access to digital infrastructure, and the need to address data privacy, data biases, and cyber risk. Next slide, please. I just wanted to briefly stop on what financial inclusion really means. It means the sustainable provision of affordable financial services that bring the poor into the formal economy. And it includes a range of financial services to provide opportunities to access and move funds, grow capital, and reduce risk. Such services can be provided by banks and other traditional financial services organizations or non-bank providers. And as I said, it contributes to development goals such as poverty reduction, greater food security, agricultural production, health protection. Next slide, please. Let's just look at the different definitions. You have fintech and DFS. Now, DFS are the products and services in the digital financial ecosystem that are delivered to users to satisfy their needs. There are high-level requirements, which we heard in the previous presentation as well. We need security, affordability, convenience, openness, open ecosystems, interoperability, and it needs to be robust. Next slide, please. Opportunities for ICTs to bridge the financial inclusion gap. That use of DFS is not without the risks, and these must be addressed strategically. At a high level, the questions to be addressed include introduction of non-financial firms deploying new digital technologies and their ability to adhere to desired levels of governance, risk management, and compliance standards. Digital technology-related risks can cause disrupted service and loss of data, including payment instructions, as well as the risk of privacy or security breaches resulting from digital transmittal and storage of data. New contractual relationships between financial institutions and third parties, including the use of agent networks and other outsourcing arrangements, may not respect agreed codes of conduct. Various regulatory issues raised by digital financial inclusion related to agents, anti-money laundering and countering financing of terrorism rule, regulation of e-money, consumer protection, payment systems regulation, and competition. Many of these issues actually fall within multiple regulators' competencies, so there is that need for effective communication and collaboration. Next slide, please. I'm going to focus on the issues in the ICT telecoms field. So fintech has enabled multiple innovations, including digital financial services. DFS and fintech raise these new issues, economic and institutional. And increasing the impact of DFS and fintech depends on collaboration, as I stated before. We need to build that enabling and innovative ecosystem, as you said, Mr. Maladi. We also need to build that deep knowledge base across the sectors. We need to ensure connectivity for DFS. That needs to be that secure, reliable, trusted infrastructure. And we need to address other key overlapping issues such as interoperability, digital identity, consumer data, privacy, and data protection. Next slide, please. So to set out the issues more visually, secure. People need to trust that money held in digital transaction accounts is secure and have the assurance that money will go only to the designated recipient with a record of the transaction. Affordable. The cost to use the ICTs and the system must be very low. Convenient. The system needs to have accessibility and to be easy to sign up for and to use. That raises issues of digital identity, but also issues of accessibility to ICTs. Open. The system needs to be able to reach many counterparties for making and receiving payments. It should not require special costly accommodations. Robust. A digital payment system needs to have high performance and satisfy the user needs, and it needs to be available for use as needed. This leads to the following questions. Who should be permitted to be a provider of digital financial services, and how should this be regulated? Is it just a question of banks versus telecoms companies? But there are other types of entities that are currently or potentially supplying digital financial services, including platforms. So should regulation be done on a functional basis or by type of provider? What are the business models for digital financial services among providers? Are the business models used in pilot and early launch sufficient to support a large-scale implementation of the ecosystem? How should national or industry-specific identity systems be used by digital financial services ecosystem? How will consumers be protected from abuse by providers and/or other end users? And how should this be regulated? How will the ecosystem balance the need to protect consumer data privacy needs against the value of the data? How should digital financial service providers and their support service providers manage the risks in the ecosystem? And how should best practices be communicated and assimilated? And what standards of quality of service should providers be held to? Rapidly changing technology presents risks and opportunities. This includes changes in mobile handsets, their capability, vendor platform capabilities, and changes in the underlying communication networks. So how to align to regional or global standards? Should digital financial service providers be required to use regional or global standards for payments messaging? How should the digital financial ecosystem work to improve financial literacy? And how should the digital financial ecosystem, to what extent is this a government function or a commercial function? Let me hone in on some of the ICT issues. Next slide, please. Network access is fundamental to DFS providers and users, yet it's not always easy. We need to go a couple back to the ensuring connectivity. So we need to reach a common understanding of the connectivity and use-related barriers to DFS development. We also need to think of unlocking interoperability, and I'm conscious of time, so I'm going to go through it a little bit faster. It involves interoperability between bank accounts and mobile wallets, and wallet interoperability remains less common. But that lack of interoperability leaves network effects private and limited rather than combined, and leaves a gap for competition problems to arise. Next slide, please. There's the contribution to digital identity. The next slide, please. Digital identity is a foundation of the digital economy. There are many approaches to identity: centralized, decentralized, functional, foundational, interoperability, mutual recognition, and standardization. So mobile operators are well positioned to contribute to the development of digital identity, but there is that need for collaboration amongst the stakeholders. Next slide, please. There's also the issue of maximizing the opportunity of consumer data. There are conflicting trends of data aggregation, sharing, trading, and analytics versus the demand for privacy and importance of trust. So we need to examine that trade-off between the freedom to innovate and consumer protection, and build consensus around issues, principles, opportunities, and boundaries relating to the use of consumer data, and develop generally recognized standards and principles. Next slide, please. So in terms of competition, measures to promote a competitive DFS environment include permitting both banks and non-banks to offer DFS, facilitating consumer switching from one DFS provider to another, fostering the development of a more open DFS architecture, ensuring that operators of payment infrastructures develop risk-based objective access criteria. And so we need to adopt a service base, or we suggest that adopting a service base rather than an institution-based approach to DFS regulation can ensure that different providers offering the same services have similar rights and are subject to similar obligations, and ensure that consumer protection regulations apply to all financial products provided digitally, and that DFS consumers have comparable consumer protection to consumers of traditional banking services. I could go on and on, but I'm conscious of time. So I wanted to also look at the DFS ecosystem and plot out the ICT ecosystem within the DFS ecosystem, where ICT brings the infrastructure, the access, applications and services, and the devices. And that brings us to the collaboration needs. Effective collaboration, we need to skip 2 slides, please. Effective collaboration and coordination is critical to the development of a safe and enabling DFS ecosystem. And DFS authorities should establish formal mechanisms for coordination. And the chart there shows you the interplay of the different actors in the DFS ecosystem. The last few slides are just what does ITU offer? What does ITU offer on DFS and DFI? Vijay, my colleague, will join you in the next session, but we've been working together with the World Bank, the Bill and Melinda Gates Foundation, and ITU on the Financial Inclusion Global Initiative. We have our regional initiatives. We have our working group on DFS with our chief regulatory offices, and we've provided country assistance, including training in India, capacity building on understanding digital payments. We have some best practice guidelines. Fiji is an example of cross-ITU and cross-entity collaboration and cooperation, as I said to you before, with the World Bank Group, CPMI, the Bill and Melinda Gates Foundation, and consists of various components. The Fiji Symposium, the first of which was held in Bangalore, country implementation, and working groups. The working groups, there's Digital Identity Working Group, the Electronic Payment Acceptance Working Group, and the Security, Infrastructure, and Trust Working Group led by ITU. The symposium, as I said, this year it was held online virtually. You can access the Fiji website to look at the documentation and the discussions that were held within the Fiji symposium. And in terms of national implementation, we focused on research, analysis, capacity building, as well as mapping, overlaying payment systems infrastructure and ICT infrastructure in maps that are available to the countries. So I've also provided in the presentation useful links of our work on digital financial services and digital financial inclusion. You can find that, and also the digital regulation, the policy and regulation work that we as ITU have been doing within the region and beyond. Those links are available to you to consult and to go back to as these presentations will be shared with you. Back to you, moderator. Thank you very much.
Thank you very much, Ms. Maddens, for giving that very comprehensive overview of some of the challenges and aspects that one must take care of as the traditional banking and the banked folks, the roles get morphed. I will now request Calvin, my colleague, to take up the question and answer session, pose the questions to the panelists for this session. Calvin.
Thank you very much. Thank you very much, Bindu. Thank you very much, esteemed panelists, for joining this session. There are a number of questions in the chat, and what I would propose to maybe have one question proposed verbally here, and the rest we can distribute to the speakers for written responses, I think. And the question fundamentally that we would want to talk about maybe is, can you speak on how the Pay Now platform of Singapore can interoperate with that of India's UPI? So this brings together both the questions of the Indian payment system, but also the links to global standards and how this all links together. So I think this would be a question to be posed potentially to all 3 panelists, but in the first instance, of course, to Mr. Dilip Aspi. Thank you very much.
Yeah, so if you guys are okay, I will take up this question. You know, the UPI, the Pay Now is a real-time system in the Singapore, and the UPI is a real-time system in India. And we have been kind of deliberating that, you know, why can't we get a real-time, efficient bank account from Singapore to bank account in India, and vice versa, remittance done like the domestic payments have done. Obviously, this involves a lot of issues. It is not as straightforward as domestic remittance, because there are 2 regulatory compliances get involved. There are 2 currencies involved in that sense. So there is a foreign exchange conversion. So it was very much critical that the 2 regulators come together and launch this project instead of anybody else. And you would have seen that RBI recently, RBI and Monetary Authority of Singapore, which is the regulator in Singapore, have announced this project, and we have started some initial discussion, and we are expecting this project will go live by July 2022. So it's going to be a seamless connection to transfer money from a bank account of both the countries, and availability of the real-time exchange, the transparent pricing, fair and efficient model is what we are planning. And once this model is successful between India and Singapore, we expect this to be taken up to the other countries as well, who has such real-time payment systems. So that's what it is, and it's still the work in progress, and you will see some more. You will get some more clarity in next 6 months, 9 months time. Thank you.
Thank you very much, Mr. Dilip Asbi. I wanted to check if any of the other panelists wants to respond to this question. In the interest of time, there are a number of other questions in the chats, but we would propose to answer them through written responses, and I can send them around to the panelists here. But unless anyone else wants to respond to this question, I would turn the floor back over to Bindu.
Okay, thank you, Calvin. And in the interest, Mr. Maladi, Ms. Sophie, would you like to respond to add to the comments from Mr. Asbe?
I think what Dilip is saying absolutely right. We echo with whatever he's saying. Yeah.
Thank
Yeah,
you.
and I agree. The key word is collaboration and exchange of information, so as to come to agreement. So I definitely agree with that. Thank you very much.
Thank you, Ms. Madden. So in the interest of time, we will jump into the second half of the webinar. And as Calvin suggested, the questions posed to the previous panelists can maybe be responded over chat. So the second half of this webinar is structured around talks on innovations in the digital financial transactions sphere. So we have the first speaker was Mr. Vijay Shekhar Sharma, founder and chief executive officer of 197 Communications, better known by its brand name called Paytm. Unfortunately, he had an urgent conflicting engagement, because of which he is not able to join us today. But Mr. Narendra Yadav from Paytm, senior vice president at Paytm, and leading the growth marketing initiative at Paytm, is going to speak on his behalf. Mr. Narendra Yadav, over to you.
Thank you so much, ma'am, for having me here. And unfortunately, the webcam is not working, so I think my video is not visible. But I'll just go ahead. So, yeah.
Yes,
so
thank you, Mr. Yadav. Please carry on.
Talking about the innovations in digital payments and fintech industry in general, last 5-6 years have been absolutely revolutionary in terms of the initiatives that have been taken by the government, the initiatives that have been taken by the regulatory authorities, by NPCI, and by a number of private enterprises. I will start my discussion by talking about the merchant payment system. So till 2015, the only way of making digital payments to any merchant was through that EDC device, where people were able to pay from credit card or debit card. That was the only mode of digital payment. Other than that, there was net banking, etc. But at that point in time, in 2015, there were only 1.5 million merchants across the country who were able to accept digital payments. And in 2015, an innovation that happened primarily from India, that was not copied from anywhere, that was very unique to India, that thing came called QR code. And the concept was very simple, and it was based on very simple insights. The insight was that in India, while these EDC devices were available, there were most of the banks, at least 10 very active banks and multiple other companies were trying to distribute these EDC devices to merchants. But there were certain basic issues. For example, the first issue was that merchant was not willing to spend money on maintaining that device, that internet connection, etc., had to be maintained. The merchant was not also absolutely comfortable with making that initial investment in the infrastructure. Merchant was also not comfortable in paying large MDR charges to the issuing banks. And based on these insights, the idea was that for any kind of digital payment to happen, there needs to be two-side connectivity needs to be there on a consumer side and on merchant side. And at least one of the consumer or merchant needs to have a smart device, the device that has connectivity, and on other side, it can be dumb device. In the days when QR code was not there, the smart device used to be the EDC terminal, which was at merchant's end and which had internet connectivity, which were able to verify whether money is available or not, money is received, etc., etc. And then the times changed, and in the days of around 2014, 15, etc., people started having smartphones, and smartphones became quite popular. So practically every individual was having a smart device in his hand. So that gave an opportunity to give dumb device to the merchant, and that dumb device was the QR code. And now merchant did not have to invest in any kind of device infrastructure. The QR code practically in its least cost format may cost just ₹1. Reason being, I mean, you can just take a printout of QR code, paste it on your shop, and you are ready to accept payments digitally. There was no maintenance cost. There was no internet connectivity that was to be there with the QR code, because all that internet connectivity, etc., had shifted from merchants end to consumers end, and most of the consumers had smartphones. And as a result of which, a complete revolution happened in the area, in the world of digital payments. Till 2015, there were only 1.5 million merchants who were able to accept payments digitally. From 2015 to now 2021, there are over 20 million or maybe 25 million merchants who are able to accept payment digitally. And this one simple innovation, this was first in India. There was nowhere else that there was this kind of absolutely a QR printout pasted at merchant shop, which was being scanned by consumers' smartphone, that was there. And this changed the landscape of merchant payments in the country. The second thing that I will want to talk about in digital payments is that most of the innovations that happen, they are small innovations. I mean, when I say small innovation, I mean small incremental improvement over what is already existing. One such improvement was the sound boxes. When merchants started accepting payments digitally, then there was a problem that they were relying on either the SMS notification from their bank or a push notification from the app that payment has been received. There were multiple, I mean, on-ground issues, which most of the players did not realize at the time they started distributing QR codes. Those were that the shop owner may not be in his shop, and so his phone will be with him. So for the time period when shop owner is not there, shop will say that digital payments will happen only when the owner comes back. Or it may happen that there is a slight delay, even a delay of 10, 15 seconds, 20 seconds in the notification that comes that money has been received. And sometimes that delay can be more. SMS can be delayed. There was a problem that I mean, merchant will not let consumer go till the time that SMS has come from the merchant, has come from the bank side. Similarly, there were small other issues that merchant may be engaged in doing his shop activities and he may not have time to touch his phone, etc. And in this, a very simple innovation happened, and this is called Soundbox. That it's a device connected directly with the server, which will send a notification, which will send a voice notification that payment has been received. When this Soundbox came, there was a perception that just for notification, how many people will want to invest in Soundbox? As we have seen, as we see today, there are over 1 million merchants who are having these sound boxes. And as more players start bringing in such devices, there will be more such device penetration that will happen on the merchant side. So it started with payments. Gradually, on the merchant side, it started happening that these merchants require multiple other services. All the software that has been created to make doing business simple has been created after taking into account the life of enterprises, the big businesses that can invest in that kind of technology, that can invest in systems that generate invoices, that manage receivables, payables, etc. In last few years, we have seen a trend in the country where multiple companies, including Paytm and many other companies, are investing in creating softwares for these small merchants, and that is seeing a massive adoption. The revolution happens when each and every small business adopts a particular way of doing business. So, and what are these kind of softwares that these companies are building on? There are, for example, many merchants in the country operate on a credit basis. They now there are softwares that are available practically for free, where they are able to record their transactions. There are systems that have been launched more like features in existing apps, where they can pay salaries of people who are working in their shop or their small business, where they are able to mark attendance for people who are working in their establishment. As a result of which, what we are seeing is that the change that started happening from digital payments for small businesses and merchants has now expanded into adoption of various kinds of software services that the merchants are able to avail to manage their businesses on day-to-day basis. We think that and the next trend is that the next problem that these merchants were facing was that most of these small merchants did not have formal credit history or formal credit bureau score or a detailed bank history to be able to eligible for loans. When they are accepting digital payments, many of these merchants are becoming eligible for small value loans, and where they are able to deduct, where they are able to pay back their loans on a daily basis. Many of these traditional banking systems or credit systems have been designed for salaried employees, and that is how the concept of EMIs, equated monthly installments, etc. Because most of these salaried employees get their salary on a monthly basis, and the concept is that they will pay back at the end of the month or at the beginning of the month. What the innovation that is happening for these small businesses is that they earn on a daily basis, and in the informal world, they used to take credit also on a daily basis. That many a times they used to take credit and do work throughout the day and were able to pay back at the end of the day. The current companies are adapting themselves to the way that these businesses are working. So as a result of which, they are able to extend loan to them, sometimes very small value loans of say 10,000 rupees, and they are able to deduct on a daily basis. So the concept of equated daily installments, which are very favorable for these businesses. So while these kind of things are happening on the merchant side, I will take some time and move on what is happening on retail side, what is happening on individual side. So on individual side, one is that digital payment has made life easier for individuals. There are around 150 million users in the country who are who are paying money digitally, who are transferring money digitally. So it started with payments, and then it started moving into the domain of what used to be the traditional banking domain. When people had to transfer money to each other, they had option of net banking or mobile banking available with them. With the current systems that are in place, they can make use of any UPI app and can pay money from any bank to any bank. Many irrespective of whether the bank account in which they are having their account is enough tech savvy or not to provide them a very good interface, they are able to do money transfers. After saving and money transfers, there is investment, the concept of investment. In last few years, that has also changed enormously. I will give two examples related to wealth management. One example is fixed deposit. Fixed deposit is one of the very favorite and very old mechanism of saving your money, or putting your money aside in the form of that this is the wealth that people have. The thing that has happened is that now FDs are linked directly with the saving account. And it is in this kind of a manner that people are able to set a limit that at the end of the day, if my account has over say 10,000 rupees, all that money gets swept out into a fixed deposit. Now, there is nothing new in this. This is happening since a long period of time. What is new is that when this money is needed, suppose you need to pay 500 rupees to someone, then that money is available at the click of a button without getting into the hassle of first break your FD, etc., etc. All that can happen during the transaction itself. We envisage that you can create an app. I should not say we envisage because it is already happening, that people are creating FD of 1 rupee and they are able to break FD even for 1 rupee. So practically entire money can be kept in a fixed deposit so that people are able to earn higher interest, and they can make any payment directly from their fixed deposit as and when they need, or they can transfer money directly from their fixed deposit. The second example in the world of wealth management that has seen a lot of change is digital gold. Indians are known for buying gold, keeping their wealth in the form of gold. In last few, I think 3 years ago, this concept came, and people were able to, instead of buying physical gold, they were able to buy gold and keep it in a digital form, and the equivalent amount of gold was kept with the buyer, with the seller of the gold, to for which they can take physical delivery as and when they want. And once this concept of digital gold came, we are seeing a huge adoption of this kind of wealth management in the country. And the interesting part is that the people who are investing in gold, in digital gold, are different from people who have been investing in physical gold. A large number of customers who are investing in digital gold are males who are first time employed, so in the age bracket of 20 to 25-year-old, and investing a small amount of money, even 100 rupee, in digital gold, and constantly gradually saving making the investment in the form of digital gold. Moving on to the third aspect of say financial services, which is credit, or rather I should say fourth, payment was first, savings was second, third is wealth management, and fourth is credit. We are seeing a lot of innovation happening in the world of credit. In India, number of people who have access to credit is low compared to its population. What is happening is that with buy now, pay later, or small value loans that many fintechs are able to offer, this thing is changing, that people are able to get access to very small value credit. So what is happening is that these companies are able to give very small value credit, say 1,000 rupees, to customers. And when and based on that, their credit history is getting developed, and gradually this limit keeps on enhancing. So this kind of thing is happening on credit, and to which I believe that in next 5 years, this market will be completely transformed in the form of that a large majority of Indians will have access to credit, and they would have built their credit history based on which they will be able to take large value loans, etc. So from my side, this was it. We'll be happy to take any questions that are there. Thank you so much.
Thank you, Mr. Yadav, for that very interesting talk covering various aspects, especially the focus on the small merchants and individuals and the digital gold piece. I'm sure we'll have some questions for you at the end of the session. We now move. Yeah, thank you, Mr. Yadav. So we now move to, we now invite Mr. Vijay Mori to talk about the ITU's Digital Financial Services Security Lab. Mr. Mori joined the ITU in 2010 and has over 20 years of experience in project management and cybersecurity. Mr. Mori is the focal point for digital financial services at the Standardization Bureau in ITU and is responsible for the ITU's Digital Financial Services Security Lab. Mr. Mori, over to you.
Sir, you are on mute.
Hello, good morning. Can you hear me now?
Yes, sir. Thank you.
Okay, sorry about that. So I'm also trying to share my screen. I don't know if you can see the screen. Can you confirm if you can see my screen, first of all, before I
Yes, sir.
continue? Can you see the slides?
Yes.
Okay, so thank you very much and good morning, everyone. It's a pleasure for me to be here today to talk about the ITU Digital Financial Services Security Lab, which is an output from the Financial Inclusion Global Initiative project between the ITU, the World Bank, the Bank for International Settlements, and this was supported by also the Gates Foundation. So the under the Digital Financial Services Security Lab, the ITU developed a methodology for conducting security audits of digital financial services applications running on USSD STK environments and also Android apps, which are now becoming more and more prevalent on smartphones. Why did we set up the Digital Financial Services Security Lab? Since 2014, the ITU has been investigating, the regulatory issues and also the areas where technical standards are required for digital financial services. And we had a focus group from 2014 to 2016, which brought together, regulators from the telco sector and also the financial services sector to discuss, the collaboration that's needed between these two sectors in the area of digital financial services. And one thing that we noted was at that time there was not a common approach, for regulators, developers, and DFS operators, to test mobile apps that are being used in the DFS ecosystem to, ensure or to check the level of assurance on security. And this was something that we tried to address under the Financial Inclusion Global Initiative, and that's how we came up with the setting up this DFS security lab, is actually to bridge this gap, in terms of testing and auditing of mobile applications, especially mobile payment applications that are used in digital financial services. One of these, one of the issues that we do is, like I mentioned, is we have a common methodology to conduct a security audit for DFS applications, and also address systemic vulnerabilities that which are not easily to test by either DFS providers or regulators. And these systemic vulnerabilities include those that impact the integrity and confidentiality of transactions. So, for instance, a strong encryption being used in the communication protocols, our user being authenticated before getting access to the service, and also what type of authentication is being used. Are the security checks made on certificates that are presented to the application? Because sometimes there could be fake certificates presented, or there could be certificates from untrusted sources. Does the application accept the certificate blindly? Can the application, for example, be executed on rooted device? In some emerging economies, there are a number of rooted devices that are used to access digital financial services. And also, how does the application treats the consumer data? Is the consumer data privacy preserved? Can consumer data or access to the transaction data be leaked during the transaction process? Is the source code properly obfuscated? Can someone make changes to the source code? These are all what we call systemic vulnerabilities, and have to be actually verified because they could be sources of vulnerabilities that could be exploited by hackers to get access to consumer data, and also maybe run malicious transactions. Actually, this is a very common problem in digital financial services, because now hackers do not need to target directly the mobile network operators infrastructure or the banks infrastructure, because they know there's a number of security measures that has been implemented at the level of the MNO or at the level of the bank. But it's easier for them to target the application that's residing on the user's device. And through the application, they could, initiate some of these, either, they plant malware on the user device, or they would execute some malicious transactions on these devices and get access to the user's funds. So that poses a big issue in terms of trust in using digital financial services application. And the ITU has developed the security lab in November last year, and we provide these as a service to emerging economies in order to test and audit their DFS applications. As part of the outputs from the Financial Inclusion Global Initiative, there are a number of reports on security that were developed, ranging from securing the SS7 network, how to implement DFS security assurance framework by DFS providers in order to better manage the security threats and vulnerabilities in the DFS ecosystem, a methodology to test USSD and Android applications, and also we have developed security audit guidelines. And all these reports are available on the ITU Fiji website. You have the link on the slide. And what we do in the lab is actually to implement the best practices that are in those reports when we do the audits on these mobile payment applications. So the objective of the lab is to collaborate with DFS regulators in emerging economies and also low-income countries, to help them in terms of adopting the security recommendations coming out of the Financial Inclusion Global Initiative, help them to conduct DFS apps security audits of the applications that are used in their countries, and we provide them with, of course, afterwards a report on the outcome of the security audits, and also with recommendations on how to address any weaknesses or vulnerabilities that have been found during the audits. We also encourage adoption of security standards on DFS through the DFS Security Lab. One of the ways we do that is by organizing security clinics, which are like security workshops that can be held either online or in the country itself, where we provide more information on how to implement the recommendations on security that came out from the Financial Inclusion Global Initiative, and also on how to conduct, for example, the security audits as well. So, for example, we also have through the security clinic, we can also organize knowledge transfer programs. If a country or regulator or DFS provider in the country wants to, for example, set up a security lab on their side to conduct some of these audits, so we have also a knowledge transfer program that we can implement as well with the country. We also assist DFS regulators to evaluate the cyber preparedness for the DFS ecosystem, and this is done basically to assess how well prepared regulators and DFS providers are in terms of responding to cybersecurity incidents that could impact either the payment system or the mobile network infrastructure that provides access to digital financial services. And of course, the objective is also to create or facilitate knowledge sharing on threats to security of DFS applications. So through the collaboration with the DFS regulators, we are also planning to set up a network among different countries, whereby regulators can also share information on threats to security of DFS applications, and therefore able to respond in a more timely manner to such threats. The security lab has 3 components. So these 3 components are the security tests that we do for USSD and STK applications. We also have developer resources for strong authentication using Fast Identity Online, which is an ITU-T recommendation or international standard for passwordless authentication. And we also conduct security audit of Android mobile payment applications using the OWASP Mobile Top 10 security risk. So this is actually the methodology that we use for the auditing for the Android DFS applications. And we're also in the process of adding a 4th component to the lab, which is to also audit iOS applications that are used for digital financial services. In terms of the FIDO developer resources, what we have at the ITU is a FIDO server that developers can use to test the FIDO authentication. So we have sample Android and sample iOS FIDO demo client app that show the user registration, deregistration, and the authentication process. And developers can use those sample client apps, that is the code in those client apps, and also use the FIDO server that's available at the ITU to test their applications prior to deployment. As far as USSD and STK security tests are concerned, there are 4 tests that we do in the lab. We do the test on SIM swap and SIM clone test, for example, whether the SIM can be copied and like a clone of the SIM made. We test susceptibility of these applications, whether they are susceptible to binary over-the-air attacks, that is, vulnerable to the SIM jacker vulnerability. We also test remote USSD execution attacks and simulate man-in-the-middle attacks, specifically for STK-based DFS applications. We're not going to go into details, but just to give you a very brief overview of what we do in the lab. So normally a SIM swap and SIM clone testing, normally there are some tests that the DFS providers can do on their side to detect, the change of device or the change of the IMSI or SIM number. So we would do these tests to find, for example, whether these are able, the DFS provider is able to detect these. In the SIM clone test, we attempt to carry out the actual duplication of the SIM card because there are still some SIM cards that are based on earlier version of the software used on SIMs. And those that are using the COMP V1 version are still vulnerable to the SIM clone attack. So by doing these tests, we bring awareness also to the DFS providers and mobile network operators, on some vulnerabilities that may be inherent in the equipment that they are using on their side for provision of DFS. With regards to the binary over the air attacks, what we do is we test the vulnerability of the application against the SIM jacker or the browser attacks that's on the SIM card, because these vulnerabilities can be exploited by attackers, for example, to initiate, for example, SMS calls, or begin a USSD session on the SIM card without the user being aware that this is happening on their side. So what we do is we check the KI values of the SIM card to know whether they are actually liable to these attacks. In the simulation of man-in-the-middle attacks, this is a test that's done to simulate, whether especially for FinSIMs that are used, whether this FinSIM could present a vulnerability, and within the FinSIM there could be malware that could be injected through the FinSIM on the device on which the FinSIM is used. So we do the test here to check whether the SIM card is actually vulnerable to this attack. The remote USSD execution attacks is done to check the Android debug bridge. So we use the Android debug bridge to send USSD mobile requests to mobile devices that are connected to, especially to Wi-Fi points. So, for example, users should be aware that they should not connect to especially unknown Wi-Fi devices that are available, because this is where these attacks tend to take place. They would exploit the ADB to run, USSD instructions on your SIM card without the user being aware. So these are the 4 types of tests that we do for USSD and USSD and STK DFS applications, and all these attacks that I mentioned that we conduct in the lab. We also have some recommendations on how to prevent these attacks, and these are detailed in the report that we publish on securing security testing for USSD and STK-based DFS applications. In terms of the Android DFS attacks, so there are different attack points for Android applications. So the data storage is one interface that could be exploited by hackers, like where you keep the application itself, the configuration files or databases. The binary source code, can this be, for example, reverse engineered? So if the hacker is able to reverse engineer the source code, they can look for vulnerabilities in the source code or find whether there are any embedded credentials like passwords or that are included in the source code, or keys. Sometimes users put the keys also in the source code. And then there's also the platform itself, whether it could be vulnerable to malware installation. So, for example, if it allows to be installed on rogue devices rooted devices, for instance. So these three interfaces, the data storage, the source code, and the platform, they are interrelated, meaning that a weakness in one of them can also lead to exploitation in the other. And the DFS security audit that we do for the lab, they are based on the OWASP Mobile Top 10 risks, which are along these 10 areas. However, in the lab, we only focus on 8 of these 10 areas. So we don't do the number 7, that is client code quality and extraneous functionality, which is number 10. Because for these two, we need access to the source code of the application. So we focus on the 8 other areas, that is the improper platform usage, insecure data storage, insecure communication, insecure authentication, insufficient cryptography, insecure authorization, code tampering, and reverse engineering. And for all these 8 areas, we have something like 18 security tests that we do to check the implementation of adequate security measures to to protect the applications. So I listed here some of the tests that we do and what is the test about. So, for example, I'll just take one as an example. For example, the one on insecure communication, we check, for example, the strength of the encryption that is used, and also whether the application is able to recognize a fake certificate, and also whether, even if it's a valid certificate, whether it's from a trusted source as well. And we found that a number of applications are actually vulnerable to this, in the sense that they sometimes do not check the source of the certificate, and they could be vulnerable to replay attacks or to man-in-the-middle attacks. So to conclude, basically the DFS Security Lab provides necessary tools that regulators and DFS providers could adopt to protect the integrity and also check whether the applications, the mobile payment applications that are used in their market, have adopted security best practices. We work together with the ITU in the following areas, for example, to implement the security assurance framework and the audit guidelines, conduct security audits of DFS applications to identify if there are any vulnerabilities that these applications are susceptible to, and also implement mitigation measures. The ITU also organize DFS security clinics, which helps on creating not only awareness but also from the Financial Inclusion Global Initiative. So this concludes my presentation, and if you have any questions, I'd be pleased to answer them. And I put on the slide also the website for the lab, and also the email if you want to contact us at the Security Lab. So thank you very much for your attention.
Thank you very much, Mr. Vijay Mori. I now invite Ms. Siska Margareta from Experian Asia Pacific to talk about innovations in the digital financial transactions ecosystem from the APAC context. Ms. Margareta is responsible for all marketing communications, corporate social responsibility, and client insight strategies and implementation across all Experian businesses in Asia Pacific. Ms. Margareta, the floor is yours.
Thank you, Bindu. Can you hear me well?
Yes, please.
Okay. I believe Shafali is controlling the slides for me. Thank you, Shafali. So in the interest of time, I think if we can flick to slide number 3, Shafali. I think the next slide, please. Yep. I think, my previous fellow speakers have defined financial inclusion quite a lot throughout this panel and the previous panel, but let me add to it to just set the scene for what I'm going to talk to you about today. There are 1.7 billion unbanked adults globally, and about 1 billion of those reside in Asia Pacific. And to define the unbanked, it's not just people without checking, savings, or mobile money accounts. It's no access to financial products as well, like insurance, loans, mortgages, which means no protection for their money from theft or loss. So it's more than just being able to transact, but it's also being able to get protection through the financial products. And I think COVID-19 pandemic has magnified the challenge. It has actually put a spotlight on the digital divide. Many of my fellow panelists have also spoken about this, as many people relied on digital payments to have groceries and purchases delivered to their homes during this pandemic, and avoiding crowds in stores and marketplaces become a matter of life and death in some nations. But the unbanked don't have these choices, and they take greater risks by having to do everything in person. They spend more time having to do all this away from what they do for a living. The pandemic is accelerating digital economies, and we are increasingly becoming cashless societies, like in Singapore, where I'm sitting right now. In an economy that runs on the assumption that individuals have full access to digital and cashless ecosystem, living without that access has huge costs. And what chance are the financially excluded have to participate in a digital economy? But if there is a silver lining in the current difficult circumstances, in my view, there are already signs that the COVID-19 pandemic could turn into a powerful booster for financial inclusion everywhere. Over the past year, we've observed a record number of new accounts being opened worldwide by firms providing mobile money, like my fellow panelists, Paytm and FinTech and online banking services. So looking ahead, the challenge will be reducing unequal access to digital infrastructures to further these advancements even more. So next slide, please, Shafali. So I think this is not the slide that I was looking for. It would be the one on Prove ID link, Shafali. A few more slides, one more before this. The one before this, Shafali. Okay, so a lot of the panelists today have talked about India, and I was asked to share more about use cases and examples outside of across Asia Pacific. But I did want to also share about this innovation that we did specifically for India that has so far actually reached a lot of people in India. I think last year alone it was 7 million people digitally enabled and being able to get credit profiles through this Prove ID innovation. And I think this year we're expecting another 8 million people in India to be able to have access. So it is one of the projects that won seed funding from our internal social innovation program for Experian globally. It started in 2013, and we have actually reached over 100 million people globally from the products that were funded and launched. And 5 of those are in Asia Pacific, including this Prove ID, which is one of the first projects to get innovation to get the seed funding from this program, and its extension Prove ID Link. So Prove ID was conceptualized in 2013. It is one of the first of our formal projects to receive that funding. And what it does is give a large rural Indian population a chance to get financially included. It facilitates banks and non-bank financial institutions in India to conduct cross-identity verification for the rural Indian population that does not have taxpayer identity or passport. and it enables the lenders to verify people's identity for loan applications in India by connecting our Prove ID product with the Indian government's unique identification database, or the Aadhaar system. And about 20% of India's population, adult population, so around 280 million people, are unbanked. And an even greater number has, of more than about 800 million, has no credit presence. Identity verification is needed not only for the formal banking presence, but also for financial inclusion through, if you think about the rural population, the farmer loans, the farm equipment loans, amongst others. So, and to add to it, as I mentioned earlier, we are swiftly moving to digital economies, and this rural Indian population is far behind in digital banking. In today's world of 3-minute loans, as I think my fellow PayTM panelists mentioned, the rural population of more than 60% of India needs to establish identity through all means possible. So I mentioned Prove ID Link. It was an enhancement that we invested in to improve the infrastructure and integrate features like e-sign, so that individuals are not only able to verify themselves, but also digitally sign documents, thereby removing all physical paperwork, and integration with alternate data platforms to open avenues for not only verifying the identity of new to credit customers, but also being able to help create financial products specific to them. So we are, as I said, expecting to reach another 8 million people this year in India, and which will bring up the total of up to around about 30 million of people in India so far who have benefited on the Prove ID. Just moving on to the next example, please, on the next slide. I will talk about another one of our innovations called PowerScore. So, yeah, that's the right slide. And so PowerScore is another one of our social innovations that, so to speak. So we focus quite a lot on innovations for financial inclusion. If anything, that is actually the mandate for our Experience regional innovation hub we call the Axe Labs, and they are focused on innovating for social impact, for financial inclusion. So PowerScore was conceptualized a few years ago with advancing financial inclusion as the ultimate goal. It's derived by leveraging experience in building credit risk scorecards, coupled with our in-depth expertise in synthesizing various data attributes. Now, just to go to why we are so focused and well placed to do this, to enable financial inclusion to what we do and what we can credibly stand for as an organization. For credit inclusion, financial inclusion, every credit or lending decision, there are 3 things that a bank or a lender has to verify: identity, or KYC, which verifies they are who they are; intent, which involves fraud check; and the third is capacity, which is basically credit scoring to verify their ability to repay. And Experian is already doing all of this. We are one of the largest data custodians in the world. We have a suite of award-winning fraud and identity verification solutions, and we're also one of the world's leading scoring companies. Which is why, as I think Sophie in the previous panel mentioned, collaboration is key, because we need also to tap into alternative data sources to bolster our data, such as telco data for the audience here, and payments data, again, similar companies like my fellow PayTM panelists. So PowerScore is doing just that. It is an alternative risk score using non-traditional credit data such as telco, payments, super apps, e-commerce, as mentioned earlier, to provide a credit profile to new to credit or thin file segment consumers. Thin file are those who have credit profiles but not much data. But it's not a purely alternative data score. It's a composite score, because where there is traditional bureau data, we will include it in the mix. So we are creating a credit profile for those without any traditional banking credit history, the new to credit or thin file segment for the first time. For those with existing credit profiles, it improves the accuracy of the credit profile, as the additional data sources would bolster their credit visibility. And what it means is, well, even for those with thin file credit profile at the moment, they will have more access to financial products because of the better accuracy of their credit profile and more data appended. So far, we have successfully used payments and telco data by partnering with such companies. And over the past years, we've managed to prove the alternative data can be as predictive as banking data, which is a huge achievement. The measure we use, some of you in the audience might know, is Gini, the Gini score. And we are seeing a Gini score in the mid-40s for the thin file cases compared to around 30% for traditional bureau data. And because of that, the results we're seeing is an increase in approval rate for loans, and lenders are able to extend credit offers to people who were previously excluded. The case example that I wanted to share with you quickly today is with a leading digital credit card in Indonesia, which increased its loan approval rate from 50 to 56% by using PowerScore with telco data. And I think, as many of you might be aware, Indonesia has a huge middle class and an increasing one, as well as high internet and mobile penetration rate, which has fueled the e-commerce market, and which is expected to reach about $35 billion US in 2020. Even before the COVID-19 pandemic, it drove consumers onto online marketplaces. Indonesians were already keen online shoppers, with 90% of the 152 million internet users having purchased online before. So this is why we partner with the leading online credit card company in Indonesia. And we also have our telco partner, PowerScore partner in Indonesia. So given that most of the loan applicants for this company do not have a history of credit card or bank account, it makes it difficult for them to assess their credit worthiness. So we decided that we would partner with them to help them identify and accept low-risk customers from otherwise rejected loan applications. The manual time for borderline applications went from 2 days to instant approval, with an additional 1,800 loans approved every month after we use telco data through PowerScore. So this means disbursements growing on average by $300,000 US per month. And the benefit to the company aside, the benefit to the consumers, the more consumers that have had loans approved that were previously would have been rejected, as well as the size of the disbursements, means these are people who now have access to more credit, or who now have access to credit. So that's on PowerScore, one of the application in Indonesia, and we're taking it now to India and the rest of Southeast Asia by using data such as bank statements, customer consented data, and of course telco and payments data. So if we move on to the next slide, I would like to share also another application. Can you move to the next slide, please, Shefali? Okay, so dynamic airtime advance is another innovation that we have applied to further financial inclusion. It was not born out of our social innovation program, but it is a microanalytics offering for us, focusing on, again, microanalytics, microfinance, which is enabling those who are underserved or underprivileged. It's based on the fact that most unbanked countries, it's true that the mobile penetration tends to be higher. Typically, in the financial excluded population, prepaid phones are used rather than postpaid. Often, these prepaid users run out of credit balance and become offline until they can top up their phone credit. What DAA, or Dynamic Airtime Advance, does is allow eligible prepaid subscribers to stay connected and continue using data or make calls when they run out of balance. And should the prepaid subscriber run out of balance, a credit profile is created and customized offer sent instantly via the best channel, such as SMS, to basically send them these advances, or the offer of advances. and if accepted, their airtime is credited to the to them, who can seamlessly continue to use their service so they can stay connected. And we balance credit risk, top-up behavior, airtime, and data usage and response rates to offer the most suitable advance amount and pricing, leading to the optimal adoption rates, and makes it easier for the telco providers to assess who to extend the credit to, how much, and how often. So the statistics that I can share with you is we have issued up until now 231 million advances. And 64 million have benefited from that. It translates to about 166 million in US dollars of advances, and 20 billion minutes enabled. And a case example is on Mobifone in Vietnam, and which basically have seen with DAA optimized SMS responses, customized offerings, and a risk scorecard approach. Mobifone achieved a 21% take-up rate for emergency top-up offers and generated over $100 million US dollars in additional revenue. But again, bringing it back to financial inclusion, there's been a lot of applications that we've done, especially during the pandemic or other crises like the Sri Lanka floods a few years ago. What we've done is work with our telco partners over there. We offer reduced or pro bono arrangements with these telco partners to make sure that they can extend those advances to those whilst they are, in lockdowns or during those floods, as I said, so that they can stay connected when they need it most, so that they can stay connected with relatives, stay connected with help, and their small businesses don't have to close down in crisis. So essentially, what we've done in the COVID-19 sort of period, we've enabled over 400 million minutes of talk time for over 2.4 million people in Thailand, Sri Lanka, and Vietnam, where our telco partners are, to stay connected during this crisis. And I think that is another application on financial inclusion, because they don't, they can stay connected. They can, as I said, the small business can still have access and can still stay open to a certain extent, even during the crisis. I am conscious of time, so I've got just one more slide, but I think I might not actually belabor the point. So if you go to the last slide, please, Shafali. My point here is just more, I lead CSR for the region as well. My point is more that even in CSR, don't think about it as just volunteering or cash donations. There are still digital innovations that we can do, that we can apply even in our giving back to community, and we've done it with partners like Grameen Foundation in India, where we essentially enabled 30,000 individuals in digital literacy, and UNICEF as well, where we use digital in order to deliver what we're trying to deliver or achieve for the adolescent mothers that we target with UNICEF. So I'll stop here and give back the reins to Bindu.
Thank you very much, Ms. Margareta. Although we would have loved to hear more about more details about your work, but in the interest of time, we had to close the session. I now request Calvin to please start with the Q&A for this particular session.
Absolutely. Thank you, Bindu, and thank you, esteemed panelists, for this presentations and speaking so far. The first question is, from the perspective of a small nation with a legacy banking system and an advanced mobile network system, what are the best solutions or approaches that can enable the mobile service provider to perform cross-border digital payments instead of relying on the local bank to upgrade the system, which will be a longer-term process? And actually, I think I would like to direct this question firstly to Ms. Siska Margareta to talk maybe about the more regional and international dynamics you've seen in this regard, including linking to potentially the discussions you had about working with telco data providers in Indonesia.
Yeah, Calvin. So I think there was an interesting question as well in the previous panel that Mr. Dilip answered around Singapore's Pay Now and India's UPI link. And there's now talks about Malaysia as well being implementing such things. So to me, to this question that you just asked me as well, that is going to open up cross-border payment data, because as you can imagine, the middle class transferring, cross-border, making cross-border payments, that's not what we're focused on in terms of financial inclusion. It's usually the bottom of the pyramid who are also unbanked and without, obviously, credit profiles that we don't know their cross-border activities. So I'll give you an example. In Singapore, we've got, obviously, a lot of migrant workers, whether it's in the construction sectors or in the lovely helpers that people have at home who come from different nations like Indonesia, Malaysia, the Philippines. These are right, we don't have this data at the moment. But with movements like this, where we can suddenly have this cross-border payments footprints, I think I find that hopeful, and I think that's one of the ways basically that we can have more cross-border transaction data available. And for Experian, I know that we certainly are excited about this. To make sure that we can capture the cross-border data payments, especially amongst the current, a lot of them are financially excluded at the moment.
Thank you very much. Unless Mr. Vijay or Mr. Narendra, you would like to respond to that as well, or to add any more perspectives on there, I believe we can move on to the next question. Okay, then the next question is, what are the futuristic challenges with regards to data security and data privacy in the financial sector? So I think this is something that both Mr. Vijay and Ms. Siska, you can both speak to a bit about in terms of the future-looking challenges when it comes to data security and data privacy within DFS. So the floor is open to the both of you, and also to Mr. Narendra, of course.
I'll let my esteemed colleague, Mr. Mori, respond, as you covered quite a lot of this.
Yes, thank you. As far as data privacy is concerned, there is going to be a need to, in a lot of countries now, they are implementing, the data protection regulations, and also other kinds of regulatory measures with regards to protecting, consumer data. There is a need to, to adopt measures that protect the consumer information. So these would be not only, technical measures, but also measures that involve around, how you assess or how you verify the compliance of the providers against those measures. So for example, one of the things that we do in the security lab that I presented is, we check, the application, does it really protect the consumer data? When the application is being used, is it possible to leak consumer data in transit? And I think you're going to see that there will be a lot more, I would say, checks that would be needed in the future on these applications, as a lot of the payment applications now are handling consumer data. So there would be more. So this is something that falls, in some countries it falls under both the purview of the central bank and also the telecom regulator. So because you have non-banks that are also providing access to financial services. So there will be some kind of regulatory collaboration required between both the central bank and the telecom regulator in this aspect to define exactly the responsibility of each party, and also to actually maybe minimum security baselines as far as data protection and data privacy requirements for providers, for both those that are from the financial services sector and those that are from maybe the non-banks who are providing digital access to digital financial services. So there would be I see the need for regulatory collaboration on this aspect to better define the responsibilities of each regulator, and also to clearly, come up with regulatory principles or guidelines that needs to be adopted by providers, whether it's financial services providers or non-banks.
Thank you very much, Mr. Vijay. Unless there are any other panelists would like to respond or add on to that statement and that response. There's another question in the chat relating specifically to PayTM. So I believe we can answer that in the interest of time. We'll answer that over written response. So thank you very much for that. I think there's one final question in the chat about digitalization at a granular level, and how would you cope with the challenges of fake transactions, given that Android systems accept all kinds of apps? But I believe this is a question that was remaining from the first session. So unless anyone would like to respond to that here, we'll answer that over the chat as well later on.
I think in the interest
that case,
of Calvin,
yeah.
respectful of people's time as well, I think we're fine to answer anything offline.
Perfect. In that case, I would like to turn the floor back over to Bindu and thank everyone again.
Okay.
Bindu?
Yeah, thank you. Thank you, Calvin. So this session has generated a lot of questions, which we will request the panelists to respond over a chat, and we can then maybe convey the responses to the participants. I now request Ms. Pamela Kumar, Director General TSDSI, to kindly make the concluding remarks. Pamela, over to you.
Yeah, thanks, Bindu. So it was quite a insightful session, and I personally learned a lot about what's happening in the financial, digitalization of the financial services area, and what are the new opportunities and innovations that are going on. So to conclude, I would like to kind of phrase it that looks like the financial world is truly gearing up to become an anytime, anywhere kind of, you can do financial transactions anytime, anywhere in a barrierless, so it's, referring to inclusion and a borderless manner. So that, cross-border transactions would become as seamless as doing domestic local transactions. So that's basically seems like the vision or the direction in which things are moving. And in the presentations today, they shared a lot of innovations. The vision of Dilip Asbe of 1 billion transactions per day coming out of India itself, which means that globally we would be probably aspiring to do maybe 7 billion transactions per day. That's the kind of infrastructure that's being put in place with all the security and the infrastructure. The security lab that Vijay talked about is, I think, something that a lot of people in the audience would be interested in engaging with. So we would like to thank everybody, and I would like to really conclude by saying that the people in the audience who have patiently gone through all of this will probably they could reach out to us and to the ITU team to really get engaged in the standards and development here, so that to make all of this a reality. So with that, I would hand it back to Bindu to conclude the session.
Thank you very much, Pamela. And thank you all the panelists for making time to join us in this webinar. Before we conclude, the next webinar in this series will be on 5G and FinTech, and it is tentatively scheduled in end November or early December. Do keep a watch on the TSDSI and ITU websites for news, for information on the next webinar. Thank you and bye-bye. Asif, shall we close the webinar?
Yeah, thank you. Thank you, everyone.